Greetings, this is Dr. Jeffrey Scott, and this is my weekend market update for the week ending in Sunday, 9/29/2024. I am now in lovely Santa Fe with just an awesome view, although who would expect 90-degree temperatures at the end of September. I titled this session, Climbing the Wall of Worry, Do Valuations Even Matter Anymore? Again, my name is Jeffrey Scott, and my email address is hgsidoc@gmail.com. If you have any questions, comments about anything I talk about, my tools, constructive criticism, please email me or go ahead and put your comments in the remarks section on YouTube. If you like this, hit the up thumb. And if you're new to my channel, hit the subscription button and then hit the alarm and you get notified when I post these. I don't monetize anything on this eBay video, so I guess if I get a lot of people to give the up thumb, they'll show it to more people. But I do this for a group of friends, and I post it on eBay for anybody else that finds it of interest. Everything I talk about should be considered education only. I'm a doctor, not a broker. I don't have any of the licenses that would allow me to tell you what to do with your portfolio, your stocks, etc. I don't know what your investment goals are, your position size, your style of money management. So even if I did have those licenses, how could I or any talking head on the internet and YouTube know what's right for you? I'm independent. I've had a number of great folks, Rob Hoffman in Wealth Charts, Van for the TradeStation tools, Praveen for TradingView and a new app, who've created tools to make what I do easy. But other than that, I'm independent of any of the major software vendors, brokerage houses, etc. And trading involves risk, and you and only you are responsible for any investment decisions you make. If you like these videos and you want something more frequently, I do something during the week when I'm not traveling, especially to some of the crazy travel I've had of late. I put on stocksanddocs.com a 5 to 10 minute video of what I think the market's doing and what my favorite pick is for the next session. I always like to look at the major markets. So natural gas, this is the season for natural gas. It's still almost 50% off its 52-week high. So obviously natural gas has been going through a difficult time, but now it's rallying. Bitcoin was up 4.6 on the week. ARK, heavy in Tesla, was up over 2. The indices really were flat on the week, and you notice what's missing is the NASDAQ. The data vendor that I use for this, or the tool, is HGSI, www.highgrowthstock.com. And for whatever reason, their NASDAQ seems to have a bad data set or hasn't updated since the 20th. I think there was something they put out about that I'll have to go find. But you could see a very narrow range for U.S. equities. The ones equities that did the best, and we'll talk about it as we go, were China. And if China's strong, that means they're buying a lot of materials. And you can see materials led up 3% on the week, discretionary communication strong, and the weakers were energy, healthcare, and financials. So even though OPEC seems to still be active in what they do, it's almost as, and we've had some major Mideast turmoil, which continued over the weekend with Israel taking out the leader of Hezbollah. You'd expect things like that to cause oil to spike, but to date, it hasn't. And I wonder if that's a bad prediction about what the economic drivers are going to be. The Q Edge tool gives me a picture of what the markets have been doing. So let me walk you through. So Friday was not a strong day in the markets, but if you look at it, it was underneath. 91% of sectors were up, 79% of industry groups, and 66% of stocks. 67% of stocks are above the midline of their Bollinger Band, so that tells me that the market's still bullish. I think we know that. You can see here that the only laggard on Friday was, where is it? Energy, which actually wasn't energy, it was information technology. Energy was up a lot on Friday. You could see mostly green when you look 1, 2, 5, 10, or a month on the sectors, industry groups, and stocks. So it has been a deceptively strong September, which is surprising because it's supposed to be one of the weakest months of the calendar, and especially in a election year in the presidential cycle. If we look at the Q market breadth tools, you could see what I talked about on my stocks and docs videos, and that is we had a really flat, yeah, we went up, but instead of going up at a 45 or a 60 degree, we're this is like a 10%, 5 to 10% um, angle here. So we're barely moving up, but we're moving up. This is a combined NYSE and NASDAQ. Maybe that's good. It's giving a chance to consolidate some gains. You could see the little blue line shows small caps and large caps. That the small caps started to improve this week. And you could see here of growth versus value, that value is starting to do better. So small cap value, well, certainly something that's been out of favor for a long time. Now this green line is part of the what get my mouse in the right monitor is bothersome because it's up in the I'm stretched area. This is a 3-month or 13-week new high, new low, and when it gets up in between these two lines, we typically have the markets pull back. We had recent Hindenburg Omens signals, but they're starting to get further and further away, but something still to be aware of. If I look at the NASDAQ and the NYSE, you could see the NYSE is getting extended by this 3-month signal, not so much the overall breadth of the NASDAQ. And if we look at the various, Dow extended, Russell 2000, not quite. Yes on the NASDAQ 100, yes on the S&P 1500, and yes on the S&P 500. So one of my concerns going into this week where we have a number of Fed speakers and a fair amount of economic news is we are extended in the markets right now. And you don't have to crash because you're extended, but maybe a little bit more continuation of this pause that we're seeing or flattening. And you could see it certainly here when you look at the different indices. S&P 500 relatively flat descent, 1500, and even the Dow relatively flat in their ascent. Rates were mostly flat. You can see 30 years up a half a percent, 0.6% on the 30-year. This is the leftist. The 10-year was up 0.5%. Markets are digesting rate cuts, China easing, economic data, and didn't really change much on the rates this week. Do we have a recession coming? Well, of course. Everybody's talking about the normalization of the 10 minus 2 yield curve, and the gray bars show you that you always get a recession after this happens. But the recession occurs a period of time later. So, yeah, we'll get a recession, but I don't think it's imminent. You could see here that you get spikes in this credit tightness measure at the time of recessions. There's no spike here. And you also seem to get recessions when this Philadelphia Diffusion Index, which is a measure of activity, drops below minus 20, and we're still well above minus 20. Again, markets extended. Here's that same indicator which pulled back and ran up the 13-week new high, new low on the market, and it's getting very close to the almost guaranteed reversal bar. Stocks above the 200, stocks above the 40, both increasing, not at maximum levels, but areas where you start to think about reversals as well. Current buckets, you can see only 7% of stocks are above the Bollinger Bands. I'll be watching that closely because this is the viewing date of 9/20. Never mind, I showed you the wrong one. I think I have. I don't think I could bring it up. Let me see if this tool will bring it up. Bear with me for 1 second if you would. Got to make a couple of things here. Yeah, the Edge Rater tool, I had a problem with it updating. We want to go into market brief and the buckets view. Let's see if this is going to write. I'm going to probably have to restart this. All right, well, the buckets are not extended. I'll just leave it at that. And this is updated to September 27th. This is the NASDAQ. This is the NYSE Common. This is where I look for Hindenburgs. Again, it's been a while since we saw them. And you could see that the new lows have reduced on both. And we're starting to see some new highs. So that's cautiously bullish appearing. If you look at what the markets did this past week, you could see that if you look at ERG, which is combining earnings per share rank, relative strength rank, and group rank, that the high ERG growth stocks actually underperformed. And what you see here is no earnings and low relative strength did the best. And it's sort of a market rotation. Now it's interesting, there's a lot of black here. And it's funny, I'm not want to beat my chest, but this is if you took the stocks that I own in sort of my model account and you look at their performance over the week with an equal dollar value invested. So it is not my account. It does not represent how I trade. It's just what was in the account on Monday morning, $500, excuse me, I think $1,000 worth per stock. That, and this is the part I'm showing you, not the number. Over half my stocks lost. So I had 8 winners and 9 losers. But because of PDD and a couple other China stocks I had bought, my portfolio was up significant. And that's interesting because this is what drove it. It was China. If you look down here, the IBD 50 was down about 1%. The weekend review, the IBD 85 was down 0.44%. The market Smith 250 growth or market surge down 0.25%. So this was a week where the growth was not in favor. Know your news and earnings on the left are all the times the Fed head is speaking. And on the right are market moving data. And there's a lot. PMIs, manufacturing, construction, JOLTS, employment, jobless claims, ISMs, and then payrolls. It's a big, big week of news. Not such a big week of earnings as you could see here. So 2 weeks ago, everything was about the Fed. Last week, the markets, if I want to use the word, got saved by China. Look what they did. They lowered reserve requirements. They lowered the repurchase rate, the medium-term lending rate, and hinted at a potential cut to the loan prime rate. A flood of fiscal spending was also announced with upcoming bond issuance expected to reach roughly half of the amount spent to counter the great financial crisis. China must be much weaker than I even imagined because that is a major liquidity attempt. Equities from China soared. You saw the U.S. equities were a little bit up, but relatively flat. And look at the Chinese equities up 13%. Again, the Qs led up 0.9 and the Russell was the laggard down 0.6, so a very small range. And I'm concerned still about the extended markets. I'm concerned about valuations. If you look at something like Costco, which I talked about on Stocks and Docs going into earnings, and I thought the biggest problem with Costco was its multiple was so high compared to its forward-looking earnings rates, and it was really priced for perfection. And at least short term, we had a little bit of a blip, and we could probably look at Costco real quick here. And I'm only jumping into TradingView because I've got my indicators and then some of the things that I like to look at from a growth perspective. So earnings came out here. And you could see they beat on earnings but missed a little bit on revenue. And I think their forward numbers were flat. Their PE forward is 175.62. If you look at their earnings percent changes here that we've been able to track, and the revenue percent changes, how do you come up with a multiple going forward of 175 if this is going to have slowing earnings and sales? And I think valuation has to be a concern in the U.S. markets. If you look at historic PEs, we're at higher than expected or average PEs, and we're about to begin a new cycle of loosening from the Fed. So I guess they could trigger just a super valuation, but I think the valuations already are a challenge. Let's go take a look at the charts. All right, let's start with the spiders. This is the weekly spiders. The white represents the prior weekly close. Monday was flat, nice move up Tuesday. Wednesday we pulled back. Thursday we gapped up. I believe this is where the China news started to come out overnight. We couldn't hold that. We pulled back into the 200 period moving average. Now, the delta between where we closed and the prior week close was still about 0.57, 0.58. So a good week, just not a big movement in the week. If we look at the daily chart, you could see what I mean by not a lot of movement. I've just wrote a rectangle on these bars. Let's see if we stay in this kind of a coiling pattern here, which could be a continuation pattern, and we go higher. But right now we'll be watching closely to see what happens. You can see the weekly spiders were up 5.57, closing at an all-time weekly high, and also hit an all-time high as well. The NASDAQ is not at all-time highs. It's had a couple of days with red candles, set a recent high on Thursday, but failed to hold it. And Friday was down another 0.56. And the NASDAQ was down, the Qs on the week was down, on the daily was down 0.56, and on the week it was up almost zero point 0.9. The diamonds, like the spiders this week, set all-time high. It was done on Friday. Kind of a shooting star, which is kind of a bearish looking candle, but up 0.32. Looking at the Russell 2000, it was in this sort of orderly flag here. And the good news is it moved up off the flag. The bad news is they're kind of not very strong candles, both closing well off the highs and below where they opened. So we'll have to watch what happens with the Russell. If we look at the VIX, you could see it was up about 5%, despite the market being higher. And if you look at the expected range or expected values in the range for this coming week on the spiders, for example, they're expecting a lot more volatility. And there's backwardation where it's cheaper to buy a November expiration volatility call than a short-term September or October call. It's just interesting. Um, I guess they expect some short-term volatility. We'll see. And then, as we already talked about earlier, that the interest rates were up a bit. On Friday, the dollar was up. Let's look at the weekly on the dollar, and you could see it was down on the week 0.25%. As long as the dollar's weak and the 10-year doesn't start rushing higher, I think this market is going to have some support there. But I am concerned, as I've mentioned multiple times, about the valuation and also about the level of extension. The commodities, gold, which set an all-time high, was down a bit, 0.79 on Friday. Silver, not at all-time highs, but at fresh breakout, was also down on Friday, 1.3%. Despite what's going on, and I find it a little bit bizarre that despite what's going on in the Middle East, oil can't get ahead of itself. And I wonder how much of that might be concerns about the economy. And I'm sure that's partly why we saw the massive liquidity injection by the Chinese. And then here is the 10-year rate. And the 10-year rate is off the bottom, but still way off the highs from May of this year.
First, let me say I apologize if there's a big volume change. My headphones died, and it wasn't the battery, so I had to flip to another set of headphones. So if the quality sucks, I apologize for that as well. Let's go ahead and look at the weekly market timing model. It's really hasn't done much of a change. We remain in a buy signal on the spiders, and I can take the yield sign off because we've never even moved below that WMA. The diamonds, even though you'll notice the weekly bond goes red here because of this pullback, I've got to have a day where the bond goes red and I close below to flip. I have not flipped the spider buy signal from my model since November 6th. The Qs up here, they are in a red bongo and a sell signal. Now, I put a yield sign to go higher here when they got back above the WMA, but until the bongo turns green, it's at best a neutral. We are in a long signal on the IWM. And how did this happen? It happened because we're above the WMA, and we had a weekly bongo turn green, and we've been in for some time at buy signal on the diamond. So we're still mostly long. So despite my trepidation on valuation and extension, my timing model still says to be long. If I look at the sectors to see where the strength in the market is, and I guess I got to reconnect to here to get the Bitcoin, so I'll do that real quick. But if we look at what's up at the top, I guess the winner right now is materials, and that's a big difference. And I have to believe that part of what's driving this is what's going on in China. Because if you think about it, the Chinese certainly love their gold and silver, don't they? Um, Industrials continue to be up at the top. So we're going to give them a star or leave their star on from before. Problem is these things are so skinny and that's in the way. Let's see if I can drag it up there. Perfect. Let's see. Utilities are holding up, and so is discretionary. Discretionary looks better than utilities. I'm going to take utilities off because they haven't shown any upward movement in a while. So strength, materials, industrials, and discretionary. Um, Not exactly defensive. Defensive staples and real estate came down some. Healthcare is often viewed as defensive as well. You can see how much it's come down. And biotech, which had been strong, has weakened. So that gives me a sense of where the leadership, and I'm not counting out utilities, it's just not in my top three. If I go into the scanners, I like to start with the heat map because it gives me a chance to look at some of our favorite stocks. Now, keep in mind, this heat map is defined by the close of the market on the end of the day on Friday, but not the 4 o'clock close, but the close that occurs after post market trading. Not much happens on Friday. Meta, after hours, you can see Meta continues to hold up well, just off of all-time highs, and probably one of the leaders within the FANG type space. Tesla also doing well. This is why ARK is doing well. Now, NVIDIA is sort of trapped under this trend line and actually broke above it on the Thursday excitement with the Chinese driving the market, but couldn't hold. And actually, on Friday, I think the Chinese told businesses to stop using NVIDIA chips, and NVIDIA was down. Is NVIDIA a problem here? No, NVIDIA is just stuck. It's in a wedge. And when you're at the top of the wedge, you have to be prepared it could come down some. We'll see if it comes down or breaks higher this week. But certainly to enter a new long position or for me to add, I'd like to see it take out that trend line and close above it. Amazon. Amazon failed here. It's good news it's above the 50 and above the 17. It had a launch indicator here. But right now, I'd at least wait till it goes back to this prior high. Micron, which had these great earnings and shot up, is still holding above the 200. But it wasn't enough to awaken NVIDIA and others. And I think Micron is the reason for that big market gap up, maybe even more so than China that I mentioned earlier. Apple, like to see it break above this trend line. It really hasn't broken down. It's just off of its prior highs. SMCI, this is what you don't want to look like when you miss your earnings. Major run up last year and now reversing back this year. Microsoft, again, above the 50, the 17 is crossed above the 50, but is this kind of a head and shoulders formation? I don't know. This doesn't look like it's got a lot of bullish momentum right now. Lilly. Lilly is one of my favorites. It's one that I gave during one of these videos. I believe I gave it back here in the fours. And I know several people, including myself, bought Lilly back then. And it's just done great because of Mangiano. But now if you look at Novo Nordisk, you could see the pressure on price cutting. And even though, and I'm in healthcare, there's not a vehicle except for the IRA to force price cuts, although you would think Bernie Sanders has something up his sleeve because NVO, Novo Nordisk, fell victim to that and broke down this week. Nothing bad happened to the company, just it became pretty clear that they're going to be pressured. And let's face it, if I can buy Ozempic for $850 in the US, but I can fly to England, take my family on a trip, and buy it for $85 and pay for the trip or part of the trip with the difference, especially if I bought a 6-month supply, there is a pricing issue in this country. I'll leave it at that. Some of the big winners this week were the casino stocks. Why? Because of Macau. And this is Wynn breaking out after significant doldrums. If you look at Las Vegas Sound, you're going to see some sands. You'll see the similar patterns. So there was a lot of interesting behavior in the market. And I'll talk about CVS and Walgreens later. So if you look at KWeb as a China surrogate, China Internet, you can see what China did. So a lot of oomph and power in China stocks and multiple launch indicators in a row. Now, these things are getting extended and it may be difficult to be chasing them. But if you look back, they still aren't to their 2023 highs yet. Let's just throw a monthly on this guy. It's on weekly. So let's go to monthly and see how high this thing has been in the past. Yeah, that's what I wanted to show you. Even though there was a huge move here and it, 32% move, I'm not sure I want to be chasing that. They are still well off their prior highs. And with the level of stimulation, when did we get these highs? In 2020, 21, after the stimulation that we saw in this country and others because of COVID. Yeah, these things may go higher, but I'll probably wait for them to come back, at least on some of them. If I go into Wealth Scanner to get a sense of what the market's doing, one of the first things that popped up to me was the number of different shares of ETFs or stocks that are above 800's gone up a lot. And look what they are: emerging markets, global e-commerce, emerging markets, China, and then you get materials. So it's pretty clear what's driving this excitement is China. Global infrastructure, China large cap, Hong Kong, all Asia except Japan, China discretionary, ESG aware emerging markets, global artificial intelligence, telecom, South Africa, communications. So more than just China, but the strength was in China. Now, I'm going to look at some stocks that might be setting up for buys. I am sort of a pattern trader, and I have a pattern that I like. I like stocks in an uptrend that pull back to support, and I like to buy them when they start to move up off of support. So let's take a look at some of the stocks in the scanner that's set up to search for those and see if we find anything that looks interesting. So first, let's go look at China. I think I've got a list of Chinese stocks. So we know the Chinese stocks have had big moves. All right, this is a China ETF. That's a big move. It may be difficult to find individual shares that are still buyable. This is HTHT, a hotel REIT, or I'm not sure it's a REIT, but it's hotel stock. A launch indicator took out the 200, massive volume coming in, well off of its highs from 23. Yes, it's extended, and that's the problem. But the 17 to 50 are below the 200, so that's not typical. You usually see the price, then the 17 to 50, then the 200. So I might be less concerned about the level of extension. Look at all these green dots. You're buying something extended. My bet it goes higher. JD is in the e-commerce space. And again, it's had a massive move. And if we look at a weekly chart, a massive move, but it's still well off where it came from. So you have to decide, are you going to be chasing these, Or do we have hope that they're going to come back and give us a better buying opportunity? NEO, EVs. I talked about my trip to Uzbekistan, which has a strong relationship with the People's Republic, and how impressed I was with the selection and appearance and quality of these small makers or additional makers of EVs. NEO is a Chinese EV maker breaking out. Again, look at the massive wall of volume. Again, well off its weekly highs. NetEase, um, not as impressive on the volume side, but the same type of a pattern. I was fortunate enough to have some PDD that I bought and nibbled on, and you could see the move here. Now, this is extended? Interestingly, it's not extended by high jump. Relative strength and OBV look good. It's above the 200. Maybe this is one that you might want to nibble on. TAL is an education services in China. These have been whipsawed by government action, so I usually stay away from them. Would have to clear the 200 for my taste. Don't know much about Uxin, but boy, did it have a move. Look at this move on Friday. This must have been where they came in earlier in the week. I can't remember which day China did the easing. It seemed to be a nonstop discussion during the week. Massive volume, took out the 200. Again, it's extended. These are probably all high risk plays, but if China continues its liquidity injection, the money's going to go somewhere. Zai Labs is a biotech, and I mean, look at its move it had this week, well off of its prior highs. It's still 40, 50% off of the prior highs or more. So there are some interesting charts here. Here is one that I once owned, which is I believe it's a games platform. It's a cheap stock. This might be a cheap way to play the rebound in China. This was a $25 stock. It's now a $9 stock. Massive volume, lots of bullish signals coming in. Relative strength and OBV look great. I can't emphasize enough how much risk these things have, but you can look at the big ones as well, like BABA. And the reason why you're not seeing BABA listed here is it's probably gone too far to meet my criteria. And look at BABA up here. Wow. Wow. Maybe it's here somewhere with one dot. Wow. That's all I could say. This is a search looking for pullbacks and uptrends. I bet it will be in my rockets. And there's BABA in my rocket scan. Wow. Why another one breaking out? So China's strong. Are you chasing? I mean, that's your own decision. Is it okay to nibble? Maybe, but I'd rather buy in a pullback. I just don't know if we're going to see that pullback. All right, let me get my mouse back here. Sometimes it gets stuck on the other monitor. All right, there you go. Materials. Now, again, the challenge with a lot of these stocks is they probably already run. And let's go back to my pullbacks and uptrend scan. And the only one was Corteva, and that's kind of a loosey-goosey looking chart. So none of the materials made my pullbacks. Industrials was the other one that we liked. And let's rank them by dots. C.H.R. Robinson. The truckers are moving. Transports are moving. Let's just take a look at this and throw out a monthly. So it's pulling back, but it's still well off highs from 2022. I can tell you that in my review over the weekend, I always look at over 1,000 charts. Several of the truck manufacturers or truckers or truck manufacturers or other transportations made my list. Now, if you want to be a bottoms up trader, you could always go into my combo list. Actually, before I do that, let's look at the high relative strength stocks. These were not in favor this week, but let's see if any of them are going to look interesting. Best Buy, I believe this was an earnings story here. Big gap up on earnings. They're the last man standing in the retail electronics, at least in my neck of the woods in Florida. Although we did just get a micro center in Miami, it's not my neck of the woods. Um, Big gap up, sideways move, and a breakout on Friday from the high base. Probably not without risk up here, but my guess is Best Buy goes higher. FNF, another stock with a pullback and a breakout. We looked at JD and Z-Lab already. Some of the high relative strength leaders. One that we talked about early in last week, I believe, this was the date. So what was the date of this? The 20th. So it was last weekend, was BWXT as one of my top choices for the week. And you could see it's just had a great move. And why did I pick it? Volume, 4 dots, and relative strength and OBV were strong. Futu is another one, Chinese stock. Again, do you buy them up here on the basis of, man, these things are way oversold historically, and there's going to be lots of liquidity injected, so they're probably going to go back to visit? I mean, it's a personal preference. I think this is high risk stuff. But as I've already mentioned before, I've got some PDD, and I may add some other Chinese positions or ETFs this week because I do believe that they're not done on the liquidity injections. Now we'll look at the combo list. The combo list I build from a lot of other lists, and these are some of my favorite stocks. Not all of them are going to be actionable. I have no idea what Established Labs Holdings is, if it's Chinese or what, but here's a stock that had my early movement signal, massive volume, breakout momentum from a squeeze, not extended, relative strength, and OBV. So this is on my buy watch. You know, we have these forever wars these days, and the big winners are the ammunitions and military equipment manufacturers, and L3 Harris Technology is one of those. Nice uptrend, bit of a base formed in here. On Friday, a nice move off the 50 with 3 dots with relative strength and OBV picking up, not extended. We looked at Best Buy. I wanted to talk a little bit about CVS and Walgreens. There's way too many of them. Their business model maybe is going to be under attack by Amazon and others, but they may have gotten too cheap. And if you look at CVS, it sort of has been basing down here for a while. And we had a nice launch on Friday, on an otherwise not exciting day in the market, with breakouts and actually the momentum, breakout the prior day in volume. Relative strength and OBV picked up. It is not extended by any means. I don't usually buy things below the 200, so I point that out, but that's about 8% away. And the other one, which is really amazing about how destroyed it's become, is Walgreens Boots Alliance. Now, this is a falling knife, and I would never advocate buying a falling knife. But look at the relative strength versus SPY. It's actually getting some relative strength. Its OBV is picking up. It had a breakout in momentum coming out of a squeeze. Now it's got the 50 and the 200 above it, so I think I'd rather play CVS. But I'm beginning to wonder if the retail drugstores have fallen too far. Now, a lot of these stocks are the same stocks that I've talked about already. I'm just looking if there's anything else that jumped out at me. So let's go look at the stocks that interested me this week. And I'll just go down to my buy watch list. This is a list of about 50 stocks that I put together. Several of them will be loaded up as trades if my prices are hit, but most of them are here for just for me to watch the market. Abercrombie and Fitch, that doesn't look that exciting, but boy, is this a pullback, massive uptrend, pullback to the 200, about to take out the 50, in a squeeze with relative strength and OBV perking its head up. I'm not buying it yet, but a breakout above the 50 I think would be interesting here. We looked at BABA. One way of playing, I'll show you two ways of playing what looks like a resurgence in Bitcoin. Similar to the last one, A and F, I'd rather see us take out these moving averages. But coin, which is active in the Bitcoin world, looks to me like it's starting to move. So I might have interest in watching coin. That's why it's on my watch list. One that I did get in that world is Hood, and I got into it back here when I had these green dots, the relative strength in OBV, and it had a big up day on Friday, suggesting to me that these derivatives of Bitcoin might be interesting. IONQ, I think this looks like a Chinese stock, but I don't know for sure. But another one that's way off, and all of a sudden it broke out, took out the 200 on massive volume. Look at the relative strength in OBV. So a lot of reasons. All right, back to IOQ. I don't know why the sound dropped, but you could see, like the Chinese stocks, a big drop and a breakout above the 200. Another beaten down stock, Lulu. Are we going to rotate into some of these better valued stocks versus the Costco's of the world? Look at Lulu here, killed with earnings miss, chopped from 500 almost in half, or actually was in half. Look at coming out of the squeeze, my green dots and relative strength OBV. This is a market that's rotating. MNSO is a Chinese e-commerce play, pullback, retest, and is this going to go up with the other Chinese stocks? Maybe. And I think on that note, I'll end up on Zim. There was a lot of the shippers. I mentioned the truckers, but there were a lot of shippers looked interesting in my list as well. And Zim is a stock that used to pay a massive dividend, and then the stock tanked. I live near Miami. I take my boat down there, and I see all these freighters. And boy, are there a lot of Zim containers. Zim's got a big explosion of earnings coming in the next couple of quarters. It looks interesting here, and I'll be watching it as well. So again, this list is not stocks that I'm going to go out and buy. It's stocks who had interesting patterns and setups. Toll Brothers. I mean, is it too late to buy housing stocks? Well, if rates come down, don't you think housing stocks are going to go up more? Toll Brothers looked interesting here as well, but it's expensive. So on that note, I'm going to try and cut out the areas that the sound dropped, and I'm going to say goodbye, and I'm traveling back home to Florida tomorrow, and I should have something up on stocks and docs on Monday or Tuesday. Have a great week, trade safe, and we'll see you on the other side.